the Money Show, and it's time to answer your queries. I'm joined by Hemant Rustagi from Vice Invest. Hemant sir, hi, good evening. Welcome to the show. And let's take Pramod's question. I think you also have the question with you, but then he's asking that he wants to invest for next 23 years and have been investing for the past 2 years. He wants to get a checkup done of his portfolio, aiming for 5 CR in 23 years.
Well, Kavita, the good thing is that he's investing through SIP and he has a time horizon of 23 years and he's already built a corpus of around 20 lakhs. So if I consider the current value of the portfolio and also the fact that he's investing 27,000 rupees per month, assuming annualized return of 12%, he should be able to accumulate a corpus of around 6 crore 30 lakh as against his target of 5 crore. So as is evident, he shouldn't have any problem in achieving his target. One important thing that I would like to mention to him here is that since he has a time horizon of 23 years, it'll be great if he can really make an effort to step up his SIP, every year, maybe 5% or 10%, and that will help him actually accumulate a much larger corpus. So that's one thing I would like him to focus on. As far as the funds are concerned, I think he's done a good job in terms of categories that he has chosen, and also the funds, barring one fund, which is also highlighted, which is SBI Mid Cap. My belief also is that there are a couple of other funds which can be better for his portfolio in place of SBI Mid Cap, which could be Motilal Oswal Mid Cap or Invesco Mid Cap. The rest of the funds, I think he has a Nippon India Multi Cap, HDFC Flexi Cap, ICICI Pru Large and Mid, and Kotak Small. I think all those funds are fine. He can continue with them.
All right, so the funds are fine, thumbs up over there. And Hemant sir, before I move on to the other viewers' question, let's talk about an outcome from SEBI board's meet. Big regulatory moves from SEBI that could reshape the mutual fund industry and widen investor participation. The market regulator has slashed the maximum exit load on mutual funds from 5% to 3%, a step towards greater investor protection. Distributor incentives are being realigned to now limited to fresh inflows from new investors in B30 cities, and for the first time SEBI is introducing special incentives to encourage women investors to enter the space, the mutual fund space. On top of that, mutual fund exposure to REITs and InvITs has been clarified. REITs will now be treated as equity while InvITs remain in the hybrid bucket. AMFI has welcomed these changes, calling them a progressive step for financial inclusion. So what does these announcements actually mean for the investors and the industry? Are we looking at a sharper push towards retail participation, especially women and first-time investors? And how will fund houses, adapt to the new incentive structure? Let's discuss this a bit, Hemant sir. And so clearly it's a win-win situation. But then, with exit load now capped at 3%, does it make mutual fund more investor-friendly? What's your take on this?
Well, Kavita, I totally agree with you. I think the decisions taken by the SEBI board, last week were actually great decisions. And I think they'll help the industry, they'll help the investors. So if you take them one by one, if you look at the fact that the exit load has been reduced, the maximum from 5% to 3%, I think it's more about, of course, I agree that this is more like investor-friendly step. But if you look at the exit load that are being charged by the industry are in the range of 1 to 2%. So I think what SEBI has done is that they've aligned the cap to what the industry was charging. So even though earlier they were allowed to charge 5%, most of the funds were charging 1 to 2%. So I think, like I said, SEBI has just aligned that. The other two things, I think they are great steps. B30 incentives, B30 cities incentives for the first time investors and the women investor. Now these are both are at the industry level. So what SEBI has said is that the distributors will get 1% incentive of the first investment made by the investor for the first time, or if the investment is through SIP, then 1% of the overall investment through SIP in 1 year. But there is a maximum cap of 2,000. So the commission, the incentive should not be more than 2,000. The same goes for the first-time woman investor. The same parameters, the maximum is 2,000. So I think these two are very, very important. In fact, SEBI has reintroduced this incentive. This will help the industry, Kavita, reach out to investors in B30 towns. And at the same time, I think more and more investors will get an opportunity to have access to the mutual funds. the fact that REITs have been given a status of uh, equity funds for taxation purpose, I think that again, I think is a great step. I think both steps have been taken. One, for the benefit of mutual fund industry and all investors for SIF, and also I think the overall limit which was there for REITs and InvIT will belong only to InvIT. So I think it's a great step, expanding the universe for both the mutual fund industry as well as investors.
All right. So, as an investor from a B30 city, my cost of investing in mutual funds will come down, or will it stay the same?
See, I think this will be overall within the limit that is allowed to them. So obviously they will work out. I don't think the cost will go up for them.
Okay.
I don't really think so. You need to really see when the guidelines come. The idea is also not to increase the cost for them, but overall, I think within the expense structure, I think this should be worked out.
Last question on classification and clarification on REITs and InvITs. We've been waiting for a retail investor pickup for these particular investments. Now, do you think since it's treated as equity, especially REITs, does this make it more attractive for retail portfolios? You will see retail investors going investing into REITs now?
Well, I don't think it really happens that way. So, look, investors need to understand what REITs are, what InvITs are. There is a small segment of investing public that really understand this, but I think it'll happen over a period of time. The fact that they have been given the status of equity really helps in people making a decision, investors making a decision over time. But this is not something that which will happen today. But also, like I mentioned earlier, this will make task easier for the fund managers and for the mutual fund industry and for the investors, especially when you look at the kind of focus SIF will have on this, because SIF will be investing in REITs and InvITs, and of course the normal mutual fund schemes also invest in both these instruments. And the fact, like I mentioned earlier, that the overall limit which was there for them to invest in mutual fund will belong only to InvITs, so there is no limit for REITs as such as of now. So the point is that these will definitely make these two instruments or these two investment option more popular, and more investors should be able to participate in them. See, of course, I'm sure you'll agree that the tax efficiency of any investment option makes a huge difference in how investors look at it, because one of the basic objective of investing in a market linked product like mutual fund is also to be able to get higher return than what you get in the traditional option, and also get the return in a tax efficient way. So I think tax efficiency of these emerging investment vehicle, I think will definitely make a difference.
All right, let's take Yogesh's question now and let's answer his query. He says that he's been investing since 4 years, Canara Bank emerging equities, DSP small cap, Franklin smaller companies, HDFC mid cap, ICICI Pru banking and financial services, Sundaram mid cap, HSBC small cap. So are these funds okay, or he needs to change his portfolio mix looking at his goal or the investment duration?
Yes, Kavita. See, he's investing 10,000 rupees. Basically, like you said, he's been investing for the last 4 years and he has another 10 years. So overall, I think his time horizon is 14 years. So I believe that I think he's a good job in terms of investing this, starting this investment process. But he's investing in 7 funds. So clearly, when you're investing in 7 funds, and within that, if you see, there are 3 small cap fund where he's investing 40% of the money. There is a banking fund where he's investing 2,000, which is 20% of his investment. There are 2 mid-cap funds where he's investing 3,000, which is 30%. So as you can see, 90% of the money is being invested in these kind of funds. And also, I think the fund selection hasn't been great. So in my view, I think he needs to cut down the risk in his portfolio and also reduce the number of funds. So my recommendation would be that he should overhaul his complete portfolio. So he should be having maybe 4 funds. I will make some recommendation to him. If he wants, he can consider those. He should look at a multi-cap fund, Kotak multi-cap, where he can invest 4,000. A mid-cap fund, Motilal Oswal mid-cap fund, invest 2,000. In the small cap, Bandhan small cap, he can invest 2,000. And one flexi cap fund, which is HDFC flexi cap, 2,000. So in all, he should be having 4 funds, and this is how he should be investing 10,000 rupees. And again, my recommendation to him also would be that he still has around 10% to 10 years to go. And if he can step up his SIP, every year, he will be able to accumulate a much larger corpus.
Right, one last question we'll take is from Shashank. He says that I'm 34 years old and want to start SIP of 10,000 monthly, and he wants suggestion of almost 4 to 5 funds to start his portfolio, and he wants to invest for 15 years, and the portfolio should be well diversified as per his requirement. That's what he says.
Well, here again, Kavita, the time is 15 years and he wants to invest 10,000. He can have an all equity portfolio. And of course, he's right when he says that he should be investing in the diversified fund. But considering the fact that equity by itself is an aggressive asset class, it's important to build a portfolio with the help of diversified funds. So my recommendation would be again the same categories: one multi-cap fund. Maybe you can look at Nippon multi-cap, invest 3,000. One mid-cap fund, which is Motilal Oswal mid-cap, 3,000. A flexi cap fund, which is Paramparic flexi cap, 2,000 rupees in that, and Invesco small cap and 2,000 in that. So in all, 4 funds, invest 10,000. Again, my recommendation to him also would be that he has 15-year time horizon. He will make a great beginning by investing in SIP, in equity fund SIP. He should try and see if he can step up his amount every year, which will ensure that there is a discipline in his saving and investment process, and also the accumulated corpus would be much larger.
All right, I think it's time on the show as well. Thank you so much, Hemant, for being on the show and helping our viewers understand every aspect of their financial portfolio, aligning their investments with their financial goals. Thank you so much for taking time out. And for our viewers, I'm going to sign off and leave you with our WhatsApp number and email ID. Do keep sending us your queries if at all you want to do your live financial planning done by our experts. Thank you so much for watching. Goodbye.